Hi, I'm Chris Bober with Team Bober at Nebraska Realty, and welcome to the spring of 2021. We are off to a great start this year, and today I want to address some concerns that people have been coming to me with about our market and what's going to happen. And the biggest question people have is the real estate market going to crash? You can't believe how many times buyers and sellers are reluctant to get into the marketplace because they think there's some sort of housing bubble, and we're going to have a repeat of what happened in 2008 in that era. So today I want to kind of clear up some misinformation out there and show you why it's a great time to buy and sell real estate. So first of all, let's look at kind of what happened in the housing market back in 2008. Now that was a buildup that had been coming for some time, and the major thing to remember is housing was one of the major causes of our previous recession. The recession of 2008 to, I think it was 9-10, whatever they ended it. Housing caused a lot of it. It was the mortgages, it was a lot of that stuff that happened. So number one, in 2006, for the first time in decades, housing prices fell. And a lot of people thought that's great because they needed to level off the market. However, it wasn't so great. The government came out and they had a Community Reinvestment Act. They tried to prop it up by giving some tax credits, and it actually did provide a little bit of a bump in the market, but they continued to deregulate the financial industry. And that really led to some bad stuff. And mortgage-backed securities and derivatives failed. So they were kind of doing some creative accounting, coming up with some new strategies of making money, and turns out they weren't very good. So in 2008, we had pretty much a total collapse of our entire economy. That led to a big, huge fallout and everything. The first thing that happened, the Bear Stearns crisis. There's a little bit of a bailout there that sort of set the stage, got the ball rolling. Then we had Fannie Mae and Freddie Mac were then taken over by the government, which started giving more government regulation, had some bailout stuff in there. And of course, on September 29th of 2008, the stock market crashed. It was a huge crash, and that set things going off in a tailspin. They had all these different acts that came out, the TARP, ARRA, and the bailouts came from all over the place. It was a tough time. Housing industry, one of the major stats that came out is housing prices fell 31.8%. Now that goes right in line with pretty much how the stock market fell too. Between 30 and 40% of money was lost in the stock market. Same thing in housing. It was definitely a difficult time as it came out. So let's talk about what happened after 2008, because I think that's important to understand where we were and how we got to where we are right now. So there's a lot of safeguards put in place after 2008. The biggest act was the Dodd-Frank Wall Street Reform and Consumer Protection Act. That set in place a lot of regulation of the financial and the banking institutions. They became a lot more regulated and a lot more rules to what they can and can't do. We also saw this act oversees all the credit, which is of course mortgages in those institutions. There's a lot of overlays that go on there. The days of the no income, no verification loans, those things were gone. In fact, there becomes more and more regulations on lending today than there ever has been, which is definitely helping us from going off in a bad direction. And they created the Consumer Financial Protection Bureau, CFPB. And this is created, it's all about consumer protection, right? It changed how we disclose things in the real estate industry. And of course, they protect consumers all over the world, but really our country. And they have a lot of overlays going in there that protect you out there as consumers. So now, let's fast forward to where we are right now. So we had this crazy thing happen, a recession happened for a few years. Then we come out of it and we start doing really well. These things are put in place to protect us, give us 11 years later, where are we right now? So this is the real estate sales that have happened in the last 5 years or 4 years, right? And this is 2020. I want you to focus in on this because last year, if you recall, we kind of shut down for, 30, 45, 60 days where nothing happened anywhere because we were very scared of the pandemic and the coronavirus. However, it rebounded so well that we set yet another record in the Omaha area, increasing from $3.3 to $3.9 billion in sales in 2020. That's amazing given the fact that we literally were shut down for a month or two. It's just amazing. That's how sales have gone, how much they've recovered. We thought this coronavirus, the pandemic, would create a recession. It isn't happening, not right here. This also goes along here with the average pricing. You see new construction, pricing went up 5.3%. In existing houses, the sale prices that went up from 2019 to 2020, went up 8.4%. We are now averaging $244,000 on an existing home in the Omaha area. That's from just a few short years ago being under 200,000 back in 2017. So straight line going right up, not crazy, but just going up nice and steadily. And this is the absorption rate from 2020. Absorption rate is basically the months of inventory that are available given the current market speed. And usually we have a big run and it goes down, then it goes back up in the winter because people stop buying, stuff stays on the market longer. Honestly, we haven't seen that. It's continued to go down, which the demand is just out of this world, and the inventory has stayed very low. So let's look at what's going on. Is the bubble going to burst? I'm going to flat out come out and say it will not happen in 2021. We don't think there is a bubble to be burst, but we know it will not happen this year. There is just too many factors that point to another record year. We also have inventory shortages. They cannot even come close to satisfying the insatiable buyer demand that's out there. So that market's going to keep on chugging, and we're just coming up with ways to try to put more inventory in there, okay? The purchasing power continues to remain high as well. Very few times in history does this match up. Usually when inventory and sales get really high, the interest rates start going up to hedge that. We're still staying at or below 3% on average for mortgage interest rates, which is absolutely crazy. The prices, they're going to continue to rise because the demand is more and more and more. It's amazing that through this pandemic, people actually value their houses more than they ever have. So I also have an interesting side note because I've done some studying and some research about the pandemic and what happened. There's some things that are happening out there that I think we want to keep our eye on, okay? So this is what about the post-COVID-19 market. And as vaccines start to roll out, we're going to start seeing more of a normal market and people engaged out there in the marketplace. But there is a forbearance moratorium that's going to end, I think it's in the end of May of 2021. At some point, this will end and people will stop being protected from not making their mortgage payments. Currently, there's 2.7 million loans that are in forbearance. 2.7 million households aren't paying their mortgage. Now, I don't know what's going to happen at the end of this, but that money is going to be due in some form, whether they add it to the back of the loan, whether they increase their payments, change their interest rates. Banks are in business to make money. They're not in business to put you in a house and not pay your mortgage. So what we're going to do is we are going to see foreclosures coming, but the foreclosures are not going to be short sales, right? In a bad market, foreclosures come and people get their house taken away from them because they owe more than the house is worth. This is going to be different. This is going to be people who have equity in their house. So even if they get foreclosed upon, it's going to be solvent. It's not going to be short sales. It's not going to be a dramatic, oh my gosh, the market's going to crash kind of moment. We also have the results of this are going to be actually some much needed inventory. As hard as it is to say people being foreclosed upon is a bad thing, it will give us some inventory in this market, which I think will help. So prediction time, 2021 will be a record year. The sales volume and prices will go up. It's almost guaranteed that we're going to do the same thing unless a major thing happens. There's going to be more inventory available. Well, how's that work, right? The market will move at ludicrous speed, and my wild card in all of this is the rural markets will emerge. So you want to watch, if you're in the Omaha area, look at Ashland. Granted, it's kind of not rural anymore, but maybe Saunders County, Cass County, some of these smaller towns, now that if they have broadband access with people working from home, they can work out in these places in the rural areas. There's neighborhoods popping up everywhere. And as that happens, it's going to free up more inventory in town for first-time buyers. So this is kind of my word this year, ludicrous speed. It said light speed, which is what the properties were moving at in 2020, is too slow. We have to go right to ludicrous speed. So that's where we're headed towards, ludicrous speed, the speed of the market. Now I'm going to come out with some new videos about how you can win in this market, both buying and selling. But if you want to go to my website, I have lots of great information about the real estate market and about what we do. Of course, here's our information if you ever want to reach out to us. So thank you so much for tuning in. We'd love to hear back from you on what you think about this video. And if you're in the market to buy or sell, build or invest, call the pros at Team Bober and we'll tackle the market for you.